My name is Michael Guyette, publisher of the Lead Lag Report. Joining me there is Mike Bird, who I think has got some really interesting insights on Japan and all kinds of different topics. But Mike, introduce yourself to the audience. Who are you? What's your background? How did you get involved, interested in market, in what you're doing career-wise, and where you're located?
Hey, Michael. Thank you very much for having me. So I'm typically located in Singapore. I'm the Economist's Asia business and finance editor. I'm currently in London, so it's a little bit of a better hour for me. Yeah, I write about corporates, about markets, about macro. It's pretty broad, which is enjoyable for me. I previously worked at the Wall Street Journal up until a couple of years ago, covering fairly similar topics across Asia. And before that, in London on the markets desk, the journal there. I guess I got interested in markets specifically while I was at university. I studied history at university, and it was shortly after the financial crisis. And that was the sort of preoccupying chat back then. I felt like you couldn't really be interested in anything that was going on in the world without understanding what was happening in markets. Yeah. And it's been Asia for the last 5 or 6 years. I lived in Hong Kong before I lived in Singapore. And yeah, Japanese markets have certainly always been very interesting to me, particularly back in a sort of Abenomics era. But yeah, I think they're really interesting again now.
So yeah, at the start of the year, the narrative was the China reopening is going to cause China's markets to surge, and seemingly out of nowhere, Japan ended up being the surprise winner. Talk us through what happened this year in terms of the kind of revival that's gone on in Japan's markets.
I think you've got a few things going on. Initially, obviously, you have the weak yen. Japanese companies, listed companies, make a huge amount of money outside of Japan. So the weak yen is them. I think there's also a lot of sort of optimism coming through about corporate governance reforms that have been going on for a little bit over a decade now. Warren Buffett's interest in Japan's general trading companies also sort of puts a market that a lot of the time foreign investors might not pay that much attention to back on the map. And I think it's quite right what you said there on China as well. If you want an international allocation, the sort of pretty miserable performance of Chinese stocks this year, and the manifold reasons about that, whether it's, US-China decoupling stuff or the property market crisis, it's made Chinese stocks a lot less appealing. The tech backlash as well, obviously, for the last couple of years. So if you're looking for that sort of international allocation and potentially a bit of exposure to East Asian sort of industry, then Japan has seemed like a sort of relatively obvious choice. And yeah, it's given a market that sort of got used to not really having that much foreign equity flow for a long time. It's given it some more interest, and obviously it's up pretty sharply. I think it's only about 15% away from the all-time late 1989 high now. So yeah, not all that far to go. I wonder whether it'll break that. But yeah, I'm also sort of slightly skeptical about the story overall, which is a weird place to be, because I think I'm optimistic about Japanese companies in general, but I sort of personally struggle to see this becoming a sort of multi-year extended rally.
Okay, so that corporate governance point has been referenced quite a bit as sort of a headline, but what specifically happened on the corporate governance side that got investor optimism to increase, and why was it needed? What was the sort of corporate governance side for these more recent changes?
So a couple of things came in after Shinzo Abe's election in the end of 2012. Actually, some of them had sort of been in the works already, but Shinzo Abe was a sort of corporate governance sort of pioneer. He was a huge fan, a sort of crusader for better corporate governance of Japanese firms. And it resulted in two things, the stewardship code and the general corporate governance code. And both of them have improved corporate governance in Japan, made them quite a bit more shareholder friendly. And they've essentially been tightening over time. So initially, these are things like having to justify the scale of cross shareholding. So Japanese conglomerates, big companies often had huge cross shareholdings. They'd own large proportions of other firms. You had these sort of webs, these networks that often weren't pretty good value for shareholders, that had developed a lot of the time since the crash in the early 1990s had led to a lot of companies owning large stakes of businesses, essentially, that they had no sort of advantage or real interest in running very well. And that had led to pretty terrible valuation for a lot of Japanese stocks. That's tightened over time, as have a number of things around essentially prioritizing shareholders. There's been a lot of encouragement to get external board members in And generally, it's been made a lot friendlier for activist investors. But even though the level of activism in absolute terms in Japan is still relatively low, the threat that it might happen to you, particularly the threat of, an international hedge fund coming in, Elliott or anyone like that, coming in and changing things up has really been raised for major Japanese companies. And it's led to a lot of changes. It's led to a lot more sort of shareholder friendly policies. You look at dividends, you look at buybacks, they've all gone up pretty sharply. So this has worked, basically. I would say it's gone pretty well. I think it's gone considerably better than people expected. And so that is certainly the positive side of things. Yeah, I would say on the structural side there, that's the sort of optimistic view of it.
Right. And it has to be basically kind of shook up the maybe complacency, because if you have that activism in place now, it's not as easy just kind of letting things coast. One of the arguments, though, for the reason for why Japan hasn't done very well for some time is these kind of zombie banks. How has the corporate governance side impacted financial institutions there? Yeah, and where I'm going with that is ultimately what we saw with Buffett. But talk through that for a bit.
Sure. So the banking side is very, very difficult because 30 years of extremely low interest rates in Japan has left, for anyone familiar with the situation, with the European banks, for example, the Japanese situation is an exaggerated version of that. It's left a huge number of banks with the price to book ratio often not just below 1, but below 0.5. These are institutions which would, really struggle with a higher or a lower interest rate environment in many ways. A lot of them on the asset side have held, in the past at least, a lot of Japanese government bonds. And when it's come time to roll those over, obviously you're talking about receiving something with a negative or very low positive yield. So a lot of these institutions have been struggling for a very long time. And I think there was a little bit of reticence to involve the banks in some of the corporate governance reforms, partly because even sort of corporate governance advocates in Japan aren't so sure about foreigners owning a lot of these regional banks, which often in a sort of very consensual business culture have a sort of symbolic role as the local institution. So that's been a big deal. But you have seen a little bit of consolidation on that front. I would say it's still a sort of very difficult sector to see consolidation in. And yeah, you do certainly have zombie companies in Japan. Obviously, it's been incredibly cheap to refinance lending. That has kept a lot of these institutions going. And it's a big thing in Japan with the demographics as well. These two stories sort of fit into each other. Often you have companies that have no real growth opportunities, sort of prolonging themselves, incredibly low default and bankruptcy rates in Japan, like ludicrously low by the standards of other advanced economies. So no, that is definitely a significant part of it.
The last year was a hell of a year from a currency volatility perspective with the yen. Impossible to obviously give exact numbers, but would you say that the bulk of the return this year has been driven more by the improvement on the corporate governance side and realization of that, or has it really been much more just the currency adjustment?
I think I would have to try and break it down myself, but the last I checked, I think I would put it at around 50-50. I mean, the weak yen has really been a huge part of it. And obviously a lot of moves in the Nikkei are really just, they're just because of the yen. That sort of inverse relationship is very strong. I'd say that the Buffett stuff was the real it was the real announcement to the world that this was real. So for anyone not familiar, Warren Buffett invested in 5 of the Soga Shosha general trading companies. These are sort of the conglomerates that were absolutely massive in Japan's sort of post-war economic and business model. Mitsubishi, companies like that, Sumitomo. They have all sorts of lines of business, and they'd ended up sort of ludicrously cheaply valued, very cheaply valued indeed. And Buffett, who I'm not aware that he'd ever really made investments in Japan before then, he came in and he made a huge mark. And those companies have had pretty incredible years already. They're all reaching the market. And I think that put things on the sort of started seeing the story when that started happening. Yeah, those announcements were a big deal.
So obviously the move was pretty aggressive and sharp. I mean, you and I both know institutional investors can move pretty slowly. Do you have a sense of where the buying of shares has been coming from? Is it primarily from within Japan, retail? Has there been foreign flow? Where's the flow coming from in general?
So the foreign flows are actually pretty large. I was looking at this, and if they continue at the rate they've continued in the last few months, this will actually be a bigger year for foreign flows in terms of dollar amounts than 2013, which is obviously a huge Abe related rally when everyone was really confident and interested in the sort of the macro story rather than a sort of structural corporate governance story. I think the flows over the last 3 months, that's, April, May, June, were in the region of $67 billion, which, is really large for Japan. The net flows that are reported by, I think, the Ministry of Finance. And that's larger than anything that happened in such a short period in 2013. So that's been really significant. What you occasionally get from Japanese buyers themselves, and I think this is a legacy of the sort of 30-year below peak market, which is that what you sometimes see is selling by Japanese retail investors, less institutional investors, but retail investors as well. So a decent amount of the activity here has been foreign investors. Certainly not all of it by any means. That's a decent flow, but it's not enough to generate that sort of rally. But they've been a significant part of it. And that's a really interesting thing because the share of foreign ownership of Japanese equities has been going down for years and years. Basically, you saw a little bump around the Abe era, but it hasn't been a huge part of the story for the country at all. And I think that's quite exciting. And I think it's where the corporate governance stuff dovetails, because the more activist and outside investor friendly the companies are, the more international investors are able to engage with them on the same terms they'd engage with a company anywhere else in the world, or certainly anywhere else in the developed world. I think that's a big thing. Even for Japanese companies, for some large cap, even for mid cap stocks, even putting information out in English, making themselves able to engage with foreign investors is a really big thing. And it's a new thing. And some of that will remain. That's not going, back in the box. Whatever happens to the market, that's going to continue, I think.
Yeah, it's almost like it's a PR campaign, right? Again, easier for foreign investors going. What about sort of the differential between, I haven't looked at this myself, but, I'm not sure if you have either, but differential between large caps and small caps in the Nikkei as an example. So the typically large caps, more multinational, more driven by exports, have more resources. Small caps are more domestic. Has there been any sort of notable differentials in performance across kind of the two sides of the spectrum?
Definitely. I can't say I've checked immediately, but the general story of the sort of Japanese equity boom has been pretty concentrated in large cap stock. And for a number of reasons, one of which you're quite right, the domestically focused stocks, obviously, they don't benefit from the cheap yen in the same way at all. A stronger yen is actually better for some of the companies that import a lot of, intermediate goods, for example. That's a much bigger deal for them. The second element is just the respective strengths of the economies, right? So like the US economy, certainly relative to anywhere else in the advanced world, has had a pretty good recovery from the pandemic. Much better than Japan's domestic recovery in terms of, absolute growth generated or spending or whatever you want to look at. So you've been better off being a large cap in that sense. And you've been better off having lots of foreign earnings. And I think the final element of this is that the corporate governance code changes really don't apply to small cap companies. It's really, they'd like them to apply to all listed companies, but it started at the very top levels the Tokyo Exchange has been pursuing. The biggest listed companies, and certainly if you start to go into the macro performance and you look at unlisted companies, this is much harder to see. Much more sort of traditional Japanese governance structure. The smaller you get, the less these changes have trickled through, and less they've really been absolutely forced by an activist. Then the biggest changes have been at the largest companies for sure.
Right. And if that's the case, I would think that makes the longer term fragility actually still pretty high, right? Because it's still then very much dependent upon a large cap concentration, weaker yen, and then of course how the BOJ responds to exogenous shocks.
Yeah, totally. So this is where, I've sort of spent years saying that this, Japan's a great place to invest and talking about these undervalued companies. And that's all still true. And that stuff is real, and it's probably as real as it's ever been. The problem here for me with the overall story and the potential for this to go on for a lot longer is the missing part. When people got excited about Japanese equities in 2013, the end of 2012, even through into part of 2014, they were excited about this corporate governance story, but they were also excited because Abe came in and said, we're going to do more aggressive monetary policy. We're going to use fiscal flexibility. They actually ended up not really doing very much fiscal stimulus at all. But they came through and they said, we're going to revive the demand side as well as improving the supply side. And this time around, there is really no expectation of a revival on the demand side, or to the extent that there is, I would say that it's sort of somewhat misplaced. And that's the missing element here, because when you look at what is truly the missing peg in the Japanese equity story, I think the real problem is just nominal growth in general. Nominal growth has been absolutely terrible for, coming up on sort of 33 years. It's been very miserable. You look at revenues per share on the MSCI Japan, they're actually lower in dollar terms than they were before the financial crisis, which I think just shows how little improvement on that front there's been. They've done much better with the revenues that they have, right? They're more profitable companies. Certainly the bigger companies are considerably more profitable, partly for all the reasons that we've spoken about. But the absolute performance of growth hasn't turned up, essentially. And I don't really understand how you get a sustained long-term equity market output, particularly for the companies that are more Japan exposed, without that sort of general growth story. Certainly when things are stagnant as they have been in Japan, I think you'd really struggle to see that coming through.
Right. And that goes back to the old argument of, demographics, immigration policy, aging, all that.
Absolutely, yeah. I mean, you can look at it from two sides, and I think both arguments are correct. I think people put a lot of weight on the demographic side. It is essentially the oldest large country in the world. It got there before most places. You look at things like an old age dependency ratio. It's this is it's a slightly worrying situation in the sense that we really don't have any understanding of how a country with the sort of average age that Japan is generates any economic growth at all. You've got an increasingly large portion of the population who are not working, who need pensions, all the sort of healthcare spending, everything around that, increasingly small working population. And also the most concerning element from my perspective is this discussion around innovation and disruptive innovation coming from the sort of very youngest groups of workers, which Japan just has fewer and fewer of. I think the other side of this to look at is the fact that Japan had, for most of its post-war history, what one economist whose name escapes me now referred to as a land standard. So instead of a gold standard, it had essentially a monetary system that was deeply connected to land markets. And basically what happened was economic growth meant rising land prices, and more and more credit went into the land market. But on the flip side of that, the higher land prices went, the more firms drew on their land collateral. They borrowed against it, right? So you had this sort of vicious cycle on and on, going into the 1980s and becoming in large part the sort of crazy land bubble that everyone knows about. The Imperial Palace in Tokyo, if you measure it just by square footage, is worth more than all the land in California. I think land prices in central Tokyo are about 100 times what they were in London. There's all sorts of crazy stories from that era. You have a violent blow up. Yasushi Miyano, the governor of the Bank of Japan, who comes in 1989, deliberately pops the land bubble in Japan. And he says it's, damaging not only the Japanese economy, but sort of Japanese morality more generally. He destroys that model. There's a sort of slow burning financial crisis for the best part of a decade, even slightly more. Land prices don't actually stop falling, urban commercial land prices in Japan, until about 2006. So there's a full 50 years of collapse. And essentially that was Japan's post-war and pre-1989 economic model. And Japan never really found another economic model. It never really found another way of growing. It never really latched on to anything else. That the land-based system was completely destroyed, but there wasn't something to replace it. And I think that's the other big side of things is you've got the demographics and then you've got, the complete end of sort of an economic model and the failure to find anything else on the other side of that.
That's actually a good transition to the other side of discussion I want to focus on, which is around fertility rates. Since you mentioned the lowered innovation and entrepreneurship, that tweet that you put out June 1st looks like it went pretty damn viral. But lay out what you put out there and explain why at the end of the day, fertility may be a much bigger deal than AI.
Sure. So, I mean, we had a cover a few weeks ago, and maybe a couple of months ago now, on fertility rates, on birth rates, and the fact that birth rates were already falling in the Western world and in most of the rich world, let's say. And everyone knows that birth rates in East Asia, in Japan, for example, have been very low for a long time. They're incredibly low in China. Where I live in Singapore, they're incredibly low. What I think people aren't quite aware of is how much they've been falling since the pandemic and how much faster they've been falling than people had forecast even say sort of a decade ago. The decline has been really rapid, and it's also spreading into countries that you would not expect it to spread into. So usually when we talk about fertility, there are a series of established relationships between income and fertility rates. And these apply both within countries and between countries. The bottom line being rich people have fewer children, more educated people have fewer children. That's historically pretty reliable way of looking at things. And then on top of that, rich countries have fewer children. Poor countries have more children. And you have this thing called the demographic transition, which is where essentially fertility rates go from about 6 per adult woman to about 2. And that's the sort of the world that we understood. And basically it's accelerating significantly more than that. You're seeing fertility rates that previously have been extremely unusual. South Korea's got a fertility rate of I think it was 0.7 last time. And lots of countries have fertility rates of between 1.5. These are really low rates. This is not slightly below replacement rate. This is quite a long way below replacement rate. And people have discussed these sort of things, which lead to an aging society, obviously, for a long time. And it means more pension spending, and it means more healthcare spending, and all of these things. But it also has, I think, a series of economic implications that people do not understand very well, which is what we wanted to focus on in the piece that I wrote in the edition in June. And basically, these are to do with innovation. And so it's one thing to say that governments will have to spend more on an elderly population. I think quite another to say, what if there's a core group of young, disruptive people that we simply have fewer of in the future? There's a lot of stuff in that article about fluid and crystallized intelligence. So these are essentially the very broad categories of intelligence that people would say that younger people much better with fluid intelligence, which means sort of problem solving in areas that they were not aware of before, engaging with new ideas. Older people have more crystallized intelligence, which is more like a sort of stock of knowledge about the things that they'd already learned that's built up over time. And ideally, you would have a balance of these two things. And I think that the real concern is that with a much older population, that you have far too few of the people on the disruptive innovation side of things. And when you look at Japan, relate this to Japan, you can see it quite clearly, in my view, and it's quite worrying. So if you look at the percentage of patents filed by Japanese inventors, Japan has always been a huge patent filer, not just through the university system and through individual inventors, but through Japanning, a huge number of corporate Japan, industrial and automakers and tech companies filing patents. You look at something like hydrogen storage or computer vision or self-driving vehicles. These are areas where, as recently as the sort of late 1990s, or even more recently than that, Japan had over 50% of the total patents filed in these areas globally, which is a number that's now sort of somewhere between like 12 and I think 20% in those categories. So it's really collapsed very quickly. Genome editing, another area that Japan used to do well in, which it doesn't anymore. I find this really fascinating and really concerning, precisely because it's the sort of thing that we don't talk about. There was one study in particular, I've just got the details of here, but it was done by some economists and psychologists. You can see in the article if you open it up. But it's basically talking about the fact that patents peak in researchers like late 30s, early 40s, depending on the sector that they're working in. And researchers keep filing patents for quite a while after that, basically until they retire. It doesn't tail off that much. It does a bit. But when you look at disruptive innovation, which is it's not just a buzzword, a category of innovation that's defined by when you patent something and essentially the technology as people understood it beforehand collapses. So people no longer need to reference the thing that came before because the thing that you introduce is so revolutionary that it becomes irrelevant to future patent and innovation activity. Those category of patents, that really disruptive innovation, is done overwhelmingly by quite young people. And the youngest patent filers are most likely that they have the highest proportions of disruptive innovation. And that goes down pretty linearly over time. So the bottom line is when you have fewer of these people working in research labs or in major companies or whatever it is, you will probably have less of this innovation. And what that means for productivity numbers, I think the worrying things we're going to find out. Basically, it's almost certainly not good. And we're going to find out about it because this is happening basically everywhere now.
Just to reset the room for a minute, since Mike's got to leave a little bit early, everybody please make sure you follow Mike Bird here on Twitter if you don't already. But if you want to come up and ask questions, click that bottom left mic request button. And as always, this will be in podcast under Lead Lag Live on all of your favorite platforms. The fertility dynamic is fascinating. I always go back to Idiocracy, that movie, right? Which if you haven't seen it, I always go back. It's more of a documentary than a fiction story. But it's interesting because that also relates obviously to the inflation, deflation type of dynamic and ultimately longer term growth. Do you get a sense that's almost like an unstoppable trend, the fertility rates just dropping? I mean, it seems to me that it's hard to get some sort of government induced stimulus to encourage people to have more children. I mean, China went the other way, right, by limiting the number of kids, but what could turn that around?
It's a good question. And I think it's really difficult because you have to start looking at like, why were people having fewer children in the first place? And this is definitely not specific to Japan. It's very clear across a number of things. There's a number of reasons and, people have very different trade-offs to the trade-offs that they used to have. I think people wanting sort of fulfilling and engrossing careers, there's an obvious trade-off to having children. I think in a large part of Asia, there's the additional complication of the sort of extremely high private education spending. It's even higher outside of Japan now than in a lot of places. And the really funny thing about this is almost everywhere, certainly in developed East Asia now, the fertility rates are considerably lower than they are in Japan. Japan actually has now the highest fertility rate in developed East Asia. Obviously, that's a bit of a sort of bull men fighting over a comb thing, and that all of these fertility rates are very low. But South Korea, Taiwan, urban China, Singapore, these places all have lower fertility rates than Japan does. But yeah, that extremely high private education spending, which is essentially, in my view, it's largely wasteful and competitive. It's designed to make sure your children are able to compete against everyone else, not necessarily to educate them specifically in a meaningful way. I mean, these kids are educated, don't get me wrong, but that's not necessarily the driving purpose of these things. I think that's very difficult to break once it's started. I'm not entirely sure how you do that, but I think recognizing the problem is a big start to it. Some of the other stuff, which will be very interesting, is contained a little bit in our front cover in the last week. I'm not sure which of the regions there was a front cover in, but basically the assisted fertility sector. So I think this is going to be a huge thing. It's got details in it like, IVF is now accounting for 9% of births in Denmark. This sort of trend of people having children later, and especially for career and expense reasons, wanting to have children later, is only going to continue. And I think that sort of assisted fertility stuff, this may be another sort of technological revolution that we look back at in the future as a really big deal. At least I hope so, because in terms of the sort of socioeconomic reasons behind these things, I really struggle to see, particularly in Asia, that trend of the sort of educational rat race being seriously disruptive.
Yeah, I mean, I think the only real answer to that is going to be, if we ever see in our lifetime, people being cloned, right? I mean, that's you almost have to have a scientific forcing of increased population.
Yeah,
enough.
I mean, you've got, eventually, there's no way of thinking about it. There's no reason that there wouldn't be sort of things like artificial wombs in the future. I'm pretty sure we're not going to see them tomorrow. But it's not an unrealistic thing to think that some of us will see that sort of stuff widely used in our lifetime, I would say. Fingers crossed, yeah, because it's, as I say, it's very difficult to sort of circumvent these incredibly powerful social forces otherwise.
Since we're focusing on a lot around Japan, obviously, here, I'd be remiss to not get your thoughts on nuclear, uranium, oil, and how all that interacts with future performance. It seems like, from everything I've read and seen, that Japan's turned the corner in terms of its views on nuclear following the disaster that happened a few years ago. But what's gone on the energy policy side of things?
Well, the energy policy in Japan is really interesting. I was fascinated around the end of the beginning of the war in Ukraine, the Russian invasion, which was an interesting point because Japan obviously joined in a large part of the sanctions. They engaged essentially with pretty much completely in most ways with the Western Bloc on that front. But one of the areas where it was a little bit more difficult, where some of the Japanese and Russian joint ventures on gas production just off the coast of Japan, between Japan and Russia, they actually continued. And I think this is a pressing issue in Japan in large part because it's a country that does have heavy industry and it does have industrial exports. It's not like the UK where, we don't make anything anymore. It's still a country that does specialize high value manufacturing, makes a lot of cars, for example, and you need industrial energy for that. And you need industrial energy to not be insanely expensive. And so the energy stuff is a very important thing. I really hope that you're right there and that the nuclear stuff has permanently turned the corner, because I think it is worrying to think about what happens with the sort of endlessly increasing industrial price of electricity. And I think Japan, the change in policy after Fukushima was obviously completely understandable, but I do think that there's been, I hope, a realization that wasn't necessarily the right thing to do. And also that the geopolitical changes that we've had recently, as well as the sort of decarbonization efforts, that you're really going to need nuclear. And since Japan was already good at this, it's not like for some countries which are looking at starting from scratch. Now, I don't know whether that ends up being restarting everything they had before and building in the same way, or looking into modular nuclear reactors. But yeah, I hope so. And I think sometimes it's a country that's expressed a more sensible approach to energy policy than some of the ones, particularly in Europe. I always found it very funny that Germany sort of cancelled all of its nuclear projects after Fukushima. Germany, of course, famously not a huge tsunami risk. So yeah, I hope Japan's going to turn the corner on that, definitely.
Yeah, that has obviously longer term implications on inflation expectations, because that's typically tied to oil prices. Speaking about just kind of more shorter term dynamics, I've seen some rumors, whatever you want to call it, that the Bank of Japan could maybe stop buying bonds to suppress yields. Any thoughts on sort of the risk of a Bank of Japan surprise? Because that could have really interesting more than a butterfly. It could have some interesting ripple effects on global markets in general.
Yeah, totally. It's a big butterfly. By all means, it's a difficult one, because people talk about surprises from the Bank of Japan, and I feel like the BOJ has an interesting reaction function in the sense that the BOJ almost is preset to surprise. So the BOJ officials have a big thing about not being forced into doing things by the market. So last year, when there were a lot of JGB shorts on, when people were expecting and to some extent trying to sort of prod the BOJ by forcing these additional massive purchases of Japanese government bonds that are going to be a sort of money loser for the BOJ. And they were trying to prod the BOJ into making the decision. And I think when that happens, the Bank of Japan instinctively reacts to push back, even at the cost of accumulating more and more JGBs, which it was doing in sort of insane numbers right at the beginning of this year. I think what's happening now is that it seems that a lot of those shorts have come off, that there isn't as much pressure anymore. And funnily enough, that's sort of exactly the circumstances in which you'd expect them to move if the BOJ has come to the conclusion that yield curve control has to come to an end. I do still think it has to come to an end at some point. I think it was a policy that was extremely useful for Japan when Japan, back in sort of 2016 or so, Japan was buying an enormous amount of government bonds. It wasn't really having a huge effect to the margin. It came in incredibly said, we're going to set this price and we're going to defend this line. And it worked for a long time. They were able to pursue the same policy goals. Now we can talk about whether that was a work at all, but they were pursuing those goals without making huge JGB purchases, certainly in the volumes they were before. I think in the inflationary scenario we're in now, it obviously doesn't work anymore and they need to get rid of it. But yeah, they've got a very strong instinct against being bounced into things by markets. And it's when you actually don't see the pressure from markets that I think the chances of them moving are considerably higher.
Right. Which is, the effect of that would be the yen would appreciate, I would think. Right. And if that's the case, that could spark all kinds of deleveraging conceivably.
Yeah, absolutely. Absolutely. And you see all sorts of interesting capital flow behavior, obviously, because of this. For example, you'd expect with higher yields, foreign assets to be more attractive to Japanese investors, just as a sort of obvious thing. But they're not in large part. And that's because most of the major institutional investors, certainly the pension funds, the insurers, they want to hedge almost all of the exposure. And their hedging costs are absolutely prohibitive when there's as big a gap in yields as there is, say, between the US and Japan now, or even between Europe and Japan now. The gaps are huge. So the sort of capital flow behavior that you would get from a change like that, I think could be quite large. Yeah, it would be a meaningful thing. It's hard to say how much of that is priced in exactly. I think people generally expect yield curve control to be dropped at some point this year. And I think one of the big questions is whether there's any sort of interpretation that this is the start of a path, whether it's just the junkie of a policy and they stick to their line of this is not tightening, which I expect is what they'll say when they eventually get rid of it, or whether there's any prospect, even a thin one, that anyone might consider this the path of beginning to small monetary tightening. That could move things quite a lot, I think. So there'll be a lot of sort of communication skill involved rather than necessarily the individual decision to drop, keep YCC.
Yeah, I mean, I have this broader thesis that where the conditions favor credit events, not based on fear mongering, but for a lot of reasons related to lagged interest rate policy, leverage, and intermarket dynamics I track. So I've always thought that the market would start being worried about refinancing into higher rates next year and start to respond off of it later this year. But I do wonder if the conditions are there, if Japan ends up being kind of the spark. I guess we'll see. But it's an interesting thesis to play out.
Yeah, and I think, well, one interesting thing, and this cropped up around the issues around Silicon Valley Bank earlier this year, and that is when you look at the interest rate risk in the banking book statistics for Japan, there is an absolutely enormous amount of interest rate risk. They are extremely sensitive to fairly small rises in interest rates. Now, of course, the Bank of Japan knows this. They're not interested in triggering a sort of any sort of credit event. That said, you don't know. It's difficult. If there was any indication that the inflation that has kicked off in Japan was embedding itself in any way, I don't personally see that at the moment. You certainly can't see it in the wage numbers. Japanese real wage growth pretty miserable. Nominal growth pretty miserable. But if you did see that, then yeah, Japanese interest rate risk at the banks is really significant, and I think several of them would really struggle to bear any sort of real interest rate increases at all.
Mike, for those who want to track more of your work, where would you point them to?
Yeah, follow me on Twitter. The Economist doesn't have bylines, but yeah, follow me on Twitter. Also listen to our Money Talks podcast as well. It's out once a week, a very broad range of business, finance, economic topics. Yeah, I really enjoy making that one. So would love people to listen.
Perfect. Thank you, Bray, for joining. Again, this will be a podcast under Lead Lag Live. Thank you, Mike. Appreciate it.
Thank you very much, Michael.